This is FX Insights Trade Focus with Quorum Capitalism Theorem, CIS-CCT Pro Calculator Trade Focus Spreadsheet. I am JC, the creator and developer of Thinkorswim Toolkit and TradingView Toolkit, the author and instructor of Pro Trading and Quorum Capitalism Theorem. In focus, the CIS Doxometer, the Quorum Capitalism Theorem Adjusted Dollar Index, and the CIS Trading Indexometer for the S&P 500 market. The Doxometer is the U.S. dollar index profile developed by combining Quorum Capitalism Theorem and Pro Trading philosophy to assess the U.S. dollar principle, productivity standards, and performance potential within the capital structures in the capital markets. The Indexometer for the S&P 500 index evaluates the capital productivity and price performance of the S&P 500 index futures. For the futures in focus, market analysis, research, and news at 9 a.m. and 3 p.m. every day to determine where market prices are trading relative to the qualitative performance expressed by the Quorum Capitalism Theorem real return on capital. So go to FX Insights, that's FX Insights at CISevents.wordpress.com to learn more about the CIS Trading Capital Market News Coverage Model. Again, that is CISevents.wordpress.com. Go to the top of the screen. In the main menu, select FX Insights. When you get to that page, there's links there to all of the resources for FX Insights. But underneath that is a detailed outline of the capital market news coverage model from CIS Trading. Also, go to YouTube and search hashtag, that's prefix hashtag, CIS-CCT Pro Calculator, and there is an overview video where you can learn more about how the Trade Focus spreadsheet is organized and calculated. On Twitter, Facebook, YouTube, all of my other websites and social media, there are links to the PDF file for the Trade Focus spreadsheet with photos that you can download and view. To accommodate the market-minded, I'm going to begin first with the real results. So that's real results first. And then I'm going to explain the more intricate details of the Doxometer and the Indexometer analysis of the CIS-CCT Pro Calculator Trade Focus spreadsheet. We're going to look at the Indexometer on the right-hand side of our Trade Focus spreadsheet when you're looking at the screen. Indexometer for the S&P 500 index futures. All right. And every metric's going to focus on outstanding shares and the projected value. All right. The projected total value of the S&P 500 index and all of the companies within it cumulatively. So the capital, when we look at capitalization, is $827.5 trillion. But in Quorum's capitalism theorem, the real capital value of that capitalization is $808 trillion. That's a difference of $19.5 trillion less in market value based on the real value of the capital structure for the outstanding shares in the S&P futures or S&P index. When we look at revenue, the revenue is $864 trillion and $714 billion. So $714 billion in revenue. That's the financial accounting measures. All right. But the actual revenue based on Quorum's capitalism theorem is only $844 trillion. All right. Now this is projected total capitalization of the S&P 500 index. That's $20.5 trillion less in market value of the real revenue that's been earned. There is a real capital gains difference. When we look at profit, net income, a real capital gains difference of $2.5 trillion less than what's reported on financial statements. The current yield or return on capital for the S&P 500 quantitatively accounted for by finance principles is 4.48%. The real yield, or the return on capital, for the quorum capitalism theorem, qualitatively accounted Index Ometer, is 4.29%. That's 0.5% less in return on capital. All right? So when we look at the metrics for the Index Ometer for the S&P 500 index futures, we're looking at a total reduction in price per share impact of $700 less per share. All right? It's saying the actual value of the S&P 500 index right now is $2,317. All right? That means that the outstanding shares, the real outstanding share value of the S&P 500 index is $200 trillion less than the projected value based on the current market values. So once again, for the S&P 500 index, the Index Ometer shows that the actual value based on real return on capital from Quorum's capitalism theorem is $2,317. And that means at that level, they can meet the standard requirement of Quorum's capitalism theorem in return on capital. All right, the current return on capital is 4.48%. All right, and the real return on capital for Quorum's capitalism theorem is 4.29%. And when we go over here and we look at the yields on the bonds, the yields are at 2.05. All right, they traded all the way up to like 210, 215, and they're down around the 205 area today when we looked at the market close. All right, now that yield's paid twice a year, once every 6 months. That's 4.1%. So if you buy a bond, your annual yield's 4.1%. The S&P 500 index is only yielding or returning on capital 4.29%, 0.5% more. Now, when we look at capital risk, all right, right here where it says Forex capital risk, where I've put everything in for the dollar, the US dollar, for the doxometer calculations, the capital risk for the dollar that the market's valued in, the principal, is 4.33%. Now, if you go to buy a share of the S&P 500 index, you are making that purchase, that transaction, that exchange with an initial capital risk of 4.33%. In other words, if you take $1 and you put it in the market, there's a risk that you're going to lose 4.33 pennies for every dollar that you put in the market. That's what the capital risk currently is. All right. Now, would you risk 4.33% loss or costs for only a 4.29% gain? And for that reason, you most certainly won't, because you would actually lose money. The dollar cannot perform. If you give it up for 4.33% risk and only make 4.29% in a gain, annualized, you've lost money, the value of money. All right? So what happens in the bond markets is the bond premium goes higher and the yields go lower, because the yield is paying pretty much the same as the yield of the market at 4.1% total in the year. You get 2.05 6 months, and then the next 6 months you get 2.05. That's 4.1%. But the market's only yielding 4.29. So what Quorum's capitalism theorem is doing is looking at the S&P 500 index and saying, where does it need to be valued so that the capital structure is correct, so that the dollar, the US dollar principal, can perform and produce in the economy, in these companies, and in the S&P index, S&P 500 index, to produce a return on capital, all right, that's real economic growth, that's sustainable, that overcomes the capital risks, the productivity standard, and the performance standard. And what that means is overcomes inflation and then creates real capital gains beyond overcoming the cost of capital and inflation. And so what Quorum's capitalism theorem is determining is that in order for the S&P 500 index to be at a capital structure where there's a real return on capital performance when a dollar is invested, it's saying that value needs to be at $2,317. And when it is, we will see a capital return, a return on capital of 23. The return on capital factor is 23.45%. So based on Quorum's capitalism theorem, that market valuation going down $700 to $2,300 puts the S&P 500 index capital structure based on the current dollar value in a position to produce an annual return of 23.85%. That's real returns. That's real growth. So now, let's look at the doxometer. And what I have done with the doxometer is created sort of an adjusted dollar index to determine what the real actual value of the dollar is based on the current capital structures and the capital performance and productivity in the market for the US dollar. So when we look at the principal US dollar, what I've done is I've gone in and I've set the US dollar up as an exchange, one for one with itself, and then assessed what the value fluctuation might potentially be in the market based on the risks, the cost of capital, and the performance standard. And then in the doxometer, I create a profile that defines where we really are when it comes to the value of the US dollar. All right? And the way I did this was when you go into foreign exchange markets and you buy the US dollar Japanese yen, okay, or you sell the US dollar Japanese yen, when you exchange your dollar in that foreign exchange currency pair, you're exchanging dollar for dollar. And what I'm going to point out is there's actually a cost of doing that and a risk in doing that, because you're taking a dollar and you're purchasing a US dollar, and you're taking a dollar and you're purchasing Japanese yen, and then you're selling one or the other. You see? So you're exchanging dollar for dollar. In the foreign currency markets, when you use your own principal to trade your own principal, whether you're using leverage, long dollar, or you're using a risk trade where you're shorting the dollar. All right? So you can never be long dollar for capital gains, and you can never be short dollar for capital gains. Long dollar is leverage trading. Short dollar is risk trading. So I'm taking leverage, in other words, the highest value of the dollar, and the risk, the lowest value of the dollar, and I'm creating a foreign exchange, dollar for dollar. So that's what I've done. The principal high of the last 4 days and the principal low of the last 4 days, I enter those values in. I go over here to my bond premium. I put my bond premium in, 102.271. And then I put my yield in, and my yield's currently trading at 2.05. All the orange boxes are entry boxes. That's where I enter my data in. So here I entered my outstanding shares, my price per share, and my EPS on the indexometer, and that's all I had to do. And then as I enter all this information in, for the US dollar, we'll see what the doxometer says in regard to the dollar. And when I do that, it's going to calculate my foreign exchange low, my foreign exchange high, based on the last 4 days of trading, all right? And it's going to create a profile with cost of capital, capital risk, my principal capital risk, my productivity standard, which is inflation, and then my total Forex productivity standard. It's going to create a power index for the dollar, the maximum price fluctuation, the power index of $7.81, and it creates all these metrics. It rates the performance, and it says that depending on your trade or how you're exchanging the dollar, there's a potential of a 274% benefit to using the U.S. dollar in the capital structures trading. So what that means is if you take the U.S. dollar and you put it to work in this particular exchange, all right, you have a potential of 274% returns. All right, that's the exchange to dollar ratio. How much does this exchange benefit the value of the dollar if I profit, if I have capital gains? All right, and then the foreign exchange active trade. All right, now that's not as relevant as far as the doxometer goes. All right, but it gives me all these metrics, and then it calculates everything out, the lowest high for the 4 days, the highest high for the 4 days. It calculates everything out. All right, it gives me a principal risk factor for the U.S. dollar, which is about 19 cents in the index. All right, and then I go to my doxometer. Okay, and when I get to my doxometer, I'm going to put in the last 4 closes for the last 4 trading sessions. All right? And when I do, it's going to give me a trade value right away of what the dollar index really is. In other words, what the value of the dollar really is. And it says it's 99.14. All right? But when I go down here to my U.S. dollar principal market value that I put in there, it traded at 98.08. So we are $1 less than what the trade value really is. All right? Then it creates a quantized percentage profile from high to low and the current trade. So we're in the 65th percentile at that price. There's still 35% above us. All right? We're in the 40 percentile at the low threshold, and we're at the 90 percentile at the high. All right, so it breaks that down, and then it gives me a long trade target. All right, that's the potential high target for the U.S. dollar. That's 105.38, 105.38. And then it gives me a short trade target, a potential low for the target of 92.91. All right, now that's a wide range. All right, that's a lot of market for the U.S. dollar. That's a total of over 12% total range, total market depth. All right. Then it's going to give me a core signal based on the core value from pro trading, and it's going to determine what right now the signal is based on the current price or the current trade value, and it's saying that it's short. All right, and it uses the short trade target value. All right. If it uses that short trade target value, then it's saying that right now the core value signal is short. But the pro value signal is long, and it uses the 105 long trade target value. All right? Right now, it takes about 14 cents in the dollar index to create a reversal, and the stop risk on any trade in the dollar index is 12 cents. So there's only 2 cents of real slippage, and that's not too bad. All right, that's not too bad. There's only 2 cents of real slippage, and what that means is if I get into a trade, all right, even if I get into it right at a stop risk, thinking it's going to bounce, consolidate, and continue, there's still a 2 cent risk before I'm going to know whether it reverses. In other words, once I get into the dollar index, when I look at the dollar value, there's sort of a 2 cent margin of error that I can't overcome because I won't know until it moves that 2 cents. All right? That's what that means, real slippage. Now, the core value, based on the pro trading principles from the pro trading seminar, is 97.72. Now, we're trading at 98.08. The core value is at 97.72. Our trade value is at 99.14. saying that the dollar is really worth 99.14, and we're trading a dollar off of that to the short side. And I have mixed signals, so that tells me that at 98.08, we're in a consolidation phase, or a reversal phase. So we're either about to reverse lower, or we're consolidating to push higher toward that 99.14 initial trade value, where it's saying the dollar's value. All right? This is the CIS trading quorum capitalism theorem adjusted dollar index. It's called the Ometer. All right? And what this tells us, when we combine the Ometer and the Indexometer, is it tells us exactly what the values and the profile for those values are for both the S&P 500 index as a representation of the entire economy and the dollar as a representation of the entire economy. So we're looking at the economic value of the United States of America based on equity investment and the performance of equity investment, business, and people. And then we're looking at the dollar as a value of the economy in the United States and its relative performance in the economy. So it's two different measures that measure economic growth. What you ideally want is an appreciation of the dollar and the appreciation of the markets in value within the quorum capitalism theorem capital structure. And that's what these profiles do. They provide for us a framework to begin with, a template for capital management relative to the value profile of the dollar and the value profile of the S&P 500 index. So once again, I am JC, Joshua Lynn Corum. I'm the owner and founder of CIS Trading, the creator and developer of Thinkorswim Toolkit and TradingView Toolkit, the author of Pro Trading and Quorum Capitalism Theorem. And this is our CIS CCT Pro Calculator trade focused spreadsheet overview for the Ometer and the Indexometer. Make sure that you review the video hashtag CIS CCT Pro Calculator. If you'll put that in search on YouTube and watch that video, it goes over how I've set up this entire spreadsheet. It's simple data entry, and all of your data entry goes in the orange boxes, and it calculates everything else out for you. All right? So that's Quorum Capitalism Theorem for Ometer and Indexometer. That's the CIS Trading Dollar Index profile and the S&P 500 Index profile based on Quorum's capitalism theorem and the pro trading philosophy.